Hey, my name's Godfrey. I'm Head of Healthcare here at Bishop Fleming. I'm joined today by Steve Tucker, Senior Manager in my team. We're going to discuss today the pension annual allowance for NHS scheme members, and in particular with reference to the current year. Steve, can you give us an overview of the pension annual allowance scheme?
Sure, Tim. Each taxpayer has a £40,000 pension annual allowance, which each taxpayer compares with their pension growth in each tax year. At the outset, I would say this also includes any personal pension arrangements you have outside of the NHS scheme, but today I shall just focus on the NHS aspect. The £40,000 pension annual allowance is compared with NHS pension growth as calculated by NHS Pensions. Each year, NHS Pensions will issue an annual allowance pension savings statement, which will give the pension growth for the relevant tax year. If the scheme member has growth in excess of the £40,000, then that excess is potentially subject to a tax charge, but where there is unused allowances from the previous 3 tax years, those can be brought forward and offset against the current year excess. Any excess that remains after that is subject to the taxpayer's highest tax rate. So if you're a 40% taxpayer, you can expect to pay a 40% tax charge on the excess that's arisen.
Okay, Steve, thanks for that. What's the significance, Steve, of the September Consumer Prices Index inflation rate of 3.1% on the scheme?
Yeah, that is something that I was watching very carefully. The September consumer price inflation increase in each year is the benchmark that's taken for increasing pension values for that year. So September 2021 consumer price inflation of 3.1% is part of the calculation to work out an increase in an NHS pension member's pension values at the end of the year. And these figures are then used for calculating the annual allowance. The GP's earnings are increased by what's called a dynamisation factor. And this is applicable to doctors who are in career average revalued earnings schemes, which for these purposes will be members of the 1995 and 2008 pension scheme, as well as the 2015 NHS pension scheme. The dynamisation factor, as it's known, is calculated based on the September 2020 consumer price inflation, in this case 3.1%, plus an additional 1.5%. What that means is for the current year pension values is that the end of year pension value is going to be uplifted by 4.6%. In calculating the pension growth for the year, NHS Pensions work out an opening pension value to deduct from the closing pension value. That opening value is uplifted by consumer price inflation in the preceding September. So in this case, September 2020, that rate was 0.5%. So we have an extreme position this year compared with recent years in that opening pension values are being uplifted by 0.5%. and closing values are being uplifted by 4.6%. Historically, when we see such a large differential between the opening and closing percentage uplifts, we see higher tax charges, and therefore it will not be unreasonable to expect higher pension growth in 2021-22 compared with previous years.
Steve, you talk about this differential. It's 0.5 to 4.6% in the current year. When was the last time we saw a spike like that?
The last time we saw a spike of this nature was 2017-18, where the differential between the opening value adjustment and the closing value adjustment was 3.5%. And indeed, we did see much higher pension growth in that year and higher tax charges on pension and allowance excesses.
Okay, Steve, so we're at a high now. What happens next September if CPI falls below that 4.6 level, or even that 3.1 level, actually, is what we're talking about here, isn't it?
Indeed, yeah, that's a good point, Tim. What will happen next year is that we will know that opening pension values for the 2022-23 tax year would be uplifted by 3.1%, being the September 2021 consumer price inflation figure. What we don't know, but as you say, if inflation does fall below 3.1%, then the uplift to the closing values will be similar to, or even potentially lower than the 3.1% adjustment to opening values. What that would lead to is lower pension growth than for this current year, and less prospect of high tax charges on annual allowance excesses.
So, Steve, thanks for that. We know, therefore, there's going to be potentially some significant tax charges arising in this year. What should scheme members do to prepare for or mitigate that higher cost in this current tax year?
Yeah. To prepare for it, I would certainly urge all scheme members to make sure that they have all the information to hand on previous year's pension growth. In other words, for the current year, 2021-22, do you know what your position is for the 3 years leading up to 2019-20, and whether there is going to be any unused allowances that can be carried forward to offset any excess in 2021-22? Anecdotally, I am aware that some doctors have taken decisions not to take on extra shifts this coming winter 2021, knowing that increasing their pensionable income is going to increase any tax charges which they may already be expecting.
Thanks, Steve. You talk anecdotally about some doctors and scheme members not taking on extra shifts. We know there's a real crisis in the NHS as we approach this winter from a resource point of view. Could the government step in and do something to help alleviate this situation?
To my mind, Tim, the way of alleviating this issue would be perhaps to reintroduce a compensation scheme that the government introduced in 2019-20, actually in relation to winter pressures around 2019-2020, just before the pandemic struck. The compensation allowed scheme members to ask the pension scheme to pay their annual allowance excess tax charges, claim the compensation. The impact being is that the scheme member wouldn't be penalised when they come to draw their pension benefits for using scheme pays in 2019-20. That was warmly welcomed at the time and would be, funds permitting, an easy solution to avoiding a staffing crisis in this coming winter.
Thanks, Steve, for that. As you can tell from our little discussion here today, it is quite a major impact, the CPI inflation increase in September, on current scheme members. And if we can help you to understand your own individual position, then please do give us a call. That's what we're here for. We would make a plea to government to look at this, and hopefully they will look back at the compensation scheme and apply that to the current year and alleviate the pressure on the NHS over this difficult winter ahead. Ish.